Natalie, we've seen an unusual regime where you have metals like gold, platinum, so precious metals rallying alongside of copper. They're all moving together, which historically is unusual because their drivers are different. From your perspective, what is the dominant driver right now? What do you like, and where do you see capital rotating into?
So it is very unusual to be seeing this. If we put a statistic on it, we've not seen gold, silver, and copper hit record highs in the same year since 1980. Right. And as you've said, there's a very good reason for that. Gold, safe haven, store of value, it rises in periods of uncertainty. But copper, industrial metals, they're used in transport, construction. They like strong economic growth. So they are almost opposite. So taking this into account, the fact of the pace of the gains that we've seen, the volatility in these price moves, it is telling us that there is something structural happening in the metals markets. And we do see the primary driver being this capital rotation into hard assets. Investors are just looking for defense against currency debasement or uncertain US policy. Now, gold is front and center of this. Silver has a high beta to gold. I'm not going to step on Marona's toes with this, but we are seeing a spillover into copper. But in the secondary driver, copper and silver, they both have a fundamental bullish backdrop, both on supply and demand, and prices were already rising before we suddenly saw this kind of frenzied appetite. So demand side, silver and copper, they've got the highest electrical conductivity of any elements in the world. So they're used in, and this is a buzzword, areas like AI, and it's very difficult to substitute them. So there is fast growing areas, demand, a floor being put there. Meanwhile, supply, mining, just the nature, it's not quick to bring metal out of the ground. There are ESG pressures, there's unforeseen risks, there's social political unrest. Copper, it's about 17 years to bring a new mine on. So there might be higher prices, there might be more demand. You can't just bring this material out of the ground. And then if we look at the material already above the ground, silver, copper, US critical minerals input this year. So now we're seeing strategic stockpiling. So this material above the ground, the US is hoarding it. China's been doing it for years. It's taking it away. And then again, just looking at financial vehicles, ETFs, backed by physical metal, particularly in the silver markets, frenzied appetite to hold it, going into ETFs, theoretically taking more above ground stocks out of the market. So this is why we've got this unusual lift in all of these metals. If it starts to break, I'll be looking at the copper gold ratio. I think that'll be one of the first indicators for us. But the fundamental backdrop, particularly for silver, particularly for copper, and this capital reallocation, that makes it very interesting for our investors and a longer term bullish outlook. Even if the capital rotation comes out, copper has got a long-term, very bullish outlook.
Interesting indeed. And just real quick, if you can, in terms of time, just answer this one real quick. I've been looking at China. They announce a lot of stimulus, but that's headlines, and base metals care about actual activity and actual orders. What do you see coming out of China in terms of activity that validates this assumption that China is actually going to demand more base?
I mean, simply put, and I always say this in this weekly call, so the metals team will be very bored to hear it, but stimulus announcements does not mean high physical demand. It certainly doesn't mean it in real time. So what we need is evidence. Are premiums going to be increasing? What's happening with domestic stocks? If they're getting drawn down, but what's happening with global stocks? Is there a different driver? High premiums in the US for, let's say, copper, concerned about tariffs, was drawing stocks down domestically for copper in China because it was being exported into the US. That's not demand in China. That's a financial benefit on a trade. Ultimately, end-use demand. How many houses are being built? How many cars are being produced? We need to really see all of those kind of indicators align to indicate higher real-world demand. Just saying you're going to input stimulus, it might be a bit more liquidity. It's not real-world demand, and that's something I think investors get caught out on. You see the index hit highs, come back off over the last 8 years because of this.
How much copper demand is actually coming from AI?
It is not as much as you expect.
Okay.
The most bullish 1 to 2 million about 500,000, the lower end. It's about 1.2% of global demand. It's tiny versus the rest of the world. It's very fine, but it's tiny.